In this video, I will review the very easy high win rate scalping strategy created by Quantum Trading Strategies to see if it actually makes money. I will backtest it 100 times with an initial account size set at $1,000 with 1 to 1.5 risk reward ratio. Okay, I'm gonna do my backtesting on a Bitcoin USD 3-minute chart, and this strategy consists of two free TradingView indicators. For the first indicator, let's add Smoothed Heikin-Ashi. This one by Sam Account X. And for the second indicator, we will add TSI, True Strength Indicator. Okay, now we need to adjust the settings on this TSI indicator. So let's make these lines a bit more visible. Okay, the strategy is ready. Let's get into our trading rules. Okay, so for a long position to be valid, we first need to wait for the price to cross over the Smoothed Heikin-Ashi, and the candlestick has to break out so it doesn't touch the shadow of this Heikin-Ashi candles. This is the way to prevent us from taking trades when the market is ranging. This means that when the candlestick is touching the shadow, we cannot enter the trade. Next condition would be to have this blue line of this TSI indicator crossing above this red line. And once we have all these conditions met, we will go ahead and place a buy order at the close of this candlestick. We will set our stop loss at the recent lowest price. For simplicity purposes, we're not going to have multiple profit targets. We're just going to set our take profit target at 1.5 times the risk. Exactly opposite is true for shorts, so we're only going to enter a short position if we have the price breaking below the Smoothed Heikin-Ashi. Our trigger candlestick has to be bearish and it doesn't have to touch these wicks. And the last condition would be to have a bearish cross on the TSI indicator so that the red line crosses over the blue line. We see we have all our conditions met, and now we're going to go ahead and place a sell order. We will set our stop loss at the recent highest price, and we will be targeting 1.5 times the risk. Okay, let me now give you a couple more examples. So here we see the strategy just issued a valid short entry. And we see this trade turned out to be profitable. Okay, this is where we had a valid long entry. We see the candlestick is bullish and it broke above the Heikin-Ashi candles. Also, it's not touching the wicks. And we have a double confirmation from the TSI indicator. Alright, this is where we had a valid short entry. And we see this strategy has been working really well so far. Okay, this is where we have a valid long entry. Alright, so we see this strategy has been working like a magic. So let's actually do our backtesting and see what the true win rate of the strategy is. So after backtesting the strategy for 100 times, we see the win rate is only 41% and we increased our account size by 2.02%. We see the equity curve looks all over the place. We had a massive drawdown of around 40%, which is not acceptable at all. The profit factor is only 1.04 and we had 5 consecutive wins against 8 consecutive losses. So overall we see the strategy is pretty terrible, and let me now actually show you why it is terrible. First of all, take a look at all these losses and tell me what's wrong with this. Okay, if you're a beginner, you probably don't see these things. But if you're a more experienced trader, you can probably notice that this strategy gives us signals to go long when the overall trend is bearish. This is mainly because we lack in a really good confirmation indicator. I must say sometimes the strategy avoids range in markets, which is pretty good, but again the trade entries are pretty bad. It's almost like you're trading with a reversal trading strategy. This indicator does not do anything, it doesn't eliminate losses at all. So first thing I would say, we should add a really good trend confirmation indicator like a 200 EMA or a super trend, and also to add a volume indicator to eliminate even more losses. So in the second part of this video I will try to improve this strategy by replacing some of these indicators. Okay, so I removed that TSI indicator, and now let's add another 2 indicators to our chart. So for the first indicator, let's search for volume flow. This one by Lazy Bear. And for the second indicator, let's add an exponential moving average. Okay, now we need to change the length for this moving average. So let's change the period from 9 to 200 and make it a bit more visible. Now we need to make some minor adjustments to the volume flow indicator. In the input section, let's change the maximum volume cutoff from 2.5 to 0.5. And let's also make these lines a bit more visible. Now the strategy is complete, let's get into the entry rules. We're only going to be looking to buy if the price is sitting above the 200 exponential moving average. The price has to close above the smoothed Heikin Ashi. Our trigger candlestick also has to be bullish and it doesn't have to touch these shadows. And lastly, we will need to have the volume flow indicator bullish, which means that the green line is above the orange line and they both are positioned above the middle line. And as soon as we have all these conditions met, we will go ahead and place a buy order. We will set a stop loss at the recent swing low. And we will be targeting 1.5 times the risk. Exactly opposite is true for shorts. We're only going to be looking to sell if the price is closed below the 200 EMA. The price also has to close below the smooth Heikin Ashi. Our trigger candlestick has to be bearish and it doesn't have to touch the shadow of this Heikin Ashi. And the last condition would be to have the volume flow indicator bearish, which means the orange line has to be above the green line and they both have to be positioned below the middle line. We see here we have all our conditions met and this is going to be our trigger candlestick. We will set our stop loss at the recent swing high. Our profit target will be set at 1.5 times the risk. Okay, let me now give you a couple more examples so you have a better understanding of how to trade with this strategy. So here we see our strategy just issued a new short signal and this is going to be our trigger candlestick. We see our first trade turned out to be successful. Okay, here we see we've got another valid short entry. And we close this trade with a nice profit as well. We cannot enter a short position here because the lines on our volume indicator are really close to each other. This short entry is valid. We see we just got another successful trade. This long signal is confirmed. Okay traders, I hope you understand the rules, so let's actually do our backtesting and see whether the strategy is any better. Okay, so we see the difference right away. Our win rate is 66% and we increased our account size by 253.95%. The equity curve is really stable, consistent, and it doesn't show any signs of serious drawdowns. The profit factor for this strategy is 2.91 and we had 11 consecutive wins against 4 consecutive losses, which is truly amazing. We see, traders, this is exactly how we build a profitable trading strategy. First, we need to find good indicators that would confirm the direction of the trend. Then we need to find a tool that would prevent us from taking trades when the market is ranging. And just like that, by eliminating losses, we win the long game. Okay, I hope you found this video useful. Don't forget to smash the like button, it really helps with the channel. And also, if you want to see more videos like this in the future, then feel free to subscribe to Trade IQ.